Hello and welcome. You're watching Buy Now, Sell Now from ET Now SBI Live Studio. I'm Kavita Thapliyal. With me is my colleague Kanishka Sarkar, and in next 1 hour we'll be answering and focusing on your stock-specific questions. So just in case you want to connect with our experts and want any suggestion, recommendation live on the show, send across your question on the number that's flashing on the screen. And also it's our city special, and we are focusing on questions from Bengaluru. So just in case you are a viewer from Bengaluru and want to ask any stock-specific queries, write down the stock name, the price at which you've bought it, and the time horizon that you want to hold on to that particular stock, and you will be answered live by our experts. And before I get connected with our experts, let's do a quick market check where the market sentiment firmly looks very positive today, and thanks to metals and PSU Bank, actually taking the market up. It's 116 on the Nifty that we can see right now. Even the market breadth is superb. It's 2201 advances, 562 declines, the NSE advanced decline ratio. But then let's look at some buzzing names, especially from the PSU pack. We can look at a few counters which are making all-time high over here. We have Indian Overseas Bank, Punjab and Sind Bank, UCO Bank, Central Bank and Canara Bank hitting all-time high. We also have SBI and Shriram Finance at new high as far as Nifty 50 index is concerned. Bank Nifty definitely hit a all-time the record high level that we saw, and even the broader markets. If you look at mid-cap and small cap, in fact, outbeating mid-cap over here. The index is up more than 1%. Mid-cap is almost up more than 1%. FMCG is almost 0.5% up with Pharma. And in fact, in today's trade, even the defense counters we are looking are doing good, and the index is up almost 1%. So a market momentum and sentiment right now very firmly positive. And yes, the market definitely is not able to hold at the upper level. We'll have to really keep a track on how we are maintaining our momentum above 26,100 out here. But then let's get connected with our expert on the show, and let's also start answering your queries. We are joined by Avinash Korakshkar, who's the market expert. Avinash, hi, morning, and welcome to the show. Before we pick up our viewer queries, let's understand the market's texture and tone from your lens. How is it looking?
Yeah, good morning, Kavita. I think markets are looking pretty good. I think the near-term trigger for the market is the December RBI policy. I think markets are penciling in that possibly there could be another rate cut coming from the RBI. And more importantly, I think there have been some reports that Russia-Ukraine war could end. So, that is also another factor which has boosted sentiment. In fact, yesterday the Dow was up significantly. I would believe that, now the near-term trigger would be obviously the India-US policy. I think hopefully people are expecting that in the month of December, we could see this getting finally signed up soon. And December historically has been a very good month. For the last 5 to 6 years, we have seen that December normally is a very good month for the market. So I think hopefully this should happen in this year also. So I think net, I think the index is going to remain in a close range. We may not cross 26,200 in a hurry. But one thing is very clear that there could be a lot of stock-specific activity ahead of the Q3 numbers, which are scheduled for the first or second week of January.
So lots of triggers to watch out for: the RBI rate policy in December, then the India-US trade deal, and Q3 earnings starting January. That's the word coming in. Hi, Avinash. This is Kanishka also joining in. So let's get started with all the queries then. And the first query is coming from the line of Mohit, who has written to us from Ludhiana, and he has a query on HDFC Life. He has 200 shares at a price of 600 rupees. He wants to hold the stock for a period of about 2 years. What would you suggest? Do you think the fundamentals are strong enough to hold for a 2-year period, and what kind of returns can be expected in this timeline?
See, I think insurance is a very mature business, but at the same time in India, the penetration of insurance is pretty low. And I think HDFC Life is a market leader here. I think in terms of numbers, in terms of their positioning, they are very well positioned. My sense is that, if the investor has a 12 to 18 month time frame, he could actually expect a compounded return of at least 18 to 20%. I think this is a compounder stock, so obviously returns could get a little slow in the initial years. But my sense is over the next, say, 12, 18 months, we could definitely expect a decent risk reward. I think he should continue to hold. My sense is 26, second half, and the year FY27 should be significantly better.
All right, so that's a take coming in. It's a hold call as far as HDFC Life Insurance is concerned. And then let's get connected with a live viewer. We have Azam from Andhra Pradesh on the phone line with us. Hi, good morning. How are you doing today, Azam?
Good morning, madam.
Hi.
How are you, madam?
I'm doing good, thank you. Thank you for sending us your question. Our expert can hear you live. You can ask your query.
Madam, Vikrant Engineering by 119, madam.
Okay. Okay. And
The short time investment, madam, period. I
Short time.
wait 2 months to 3 months, madam.
okay, you want to wait 2 to 3 months. Okay. Vikrant Engineering is the stocking concern over here. Avinash, what's your take?
Well, I think it's a recently listed company, Kavita, and I think they are largely in the construction and the EPC business. Very healthy order book of almost 1700 to 1800 crores. I think, the investor seems to have purchased it for the short term. So my suggestion is that if he can hold on till the next 3 to 6 months, I think that would give him a better alpha because the stock actually was in the limelight for some time. It went up and now it's again come down due to some profit booking pressure. Fundamentals continue to remain strong. So I think, if you can hold on for the next 3 to 6 months, better numbers could possibly read it and you could get not only your buy price, but make a decent gain in the short term.
All right, so that's the view on Vikrant Engineering. And also joining us now on the technicals is Hemen Kaparia, who's a technical associate at DR Choksi FinServe. Hi, Hemen. Good morning. Thank you so much for joining us today. Well, let's get all our queries answered then with you. We have a viewer, Venkatesh, who's written to us from Indonesia. He wants to know whether or not he can buy Sona ComStar at the current price. He's looking for a short-term advice. Mr. Kaparia, what would your view be?
Very good morning to you, Kanishka. Thank you for having me on the show. It's always a pleasure. As far as Sona ComStar is concerned, one would be, I would say, wait a bit because things don't look very great because it's had a move. The stock has moved from 400 to 520. So if you were to buy from a short-term point of view, I would buy on declines. I would buy it closer to 490 with a stop loss of 475.
All right, so buy on declines as far as Sona BLW is concerned. But then let's move on. And this is a question from Mr. Lakshmanan. And he wants to know about Britannia. Avinash, I'll come to you. So he wants to know if he can gradually increase his exposure in this particular counter or he can switch to any other food processing stock. He has not mentioned his time frame, but then what's your outlook and what's the time frame, Avinash, that you would want to suggest?
I think Britannia definitely could benefit in terms of higher volume growth. And I think most of the GST cuts which have been announced, I think you could see a good traction in the December quarter. My sense is, FMCG companies are not cheap. They are fair to expensive. So I think at these levels, if the investor buys, he could target a 15% kind of return over the next, say, 12 to 15 months. Hopefully, FY27 will be much better. And I think this year the monsoon has been good. There have been 2 rate cuts plus a good kind of traction post the GST cuts. So all that should definitely help the company. I think we are looking forward for a better December quarter and hopefully a better FY27. So I think for a 14-15% upside, he could definitely look at buying the stock at current levels and even some stock on any decline if possible.
Okay, so that's the view on Britannia. Thanks, Avinash. But let's move on to the next query then. So this is a big query of sorts. This is Sanjay writing from Bangalore. So he has query. He wants to buy some metal prospects for a period of about 1 to 2 years. He's looking at aluminum, Hind Copper and Hindalco. He wants to know which is a better pick in the metal space, and also he wants to know your view on Tata Power and Adani Power. Which one is better for a period of 2 to 3 years? Avinash, would you like to take this?
Yeah, I think, within the metal pack, we are positive on Hindustan Copper and Vedanta. I think these could be good bets because here metal prices have been rising quite steadily. Vedanta is available at very attractive valuations. And most importantly, I think most of these metal companies have been beaten down from their peak valuations. Hopefully, the December quarter could be a good quarter. I think domestic demand is growing quite steadily. So Hindustan Copper, Vedanta should show higher kind of volume kind of growth in this period. And more importantly, I think, if the investor can hold on for the next 6 to 12 months, if global metal prices go up, that would further aid the growth for both these companies.
All right, let's move on. There's one more long-term query. Avinash, I'll once again come to you. This is from Mr. Mohan from Hyderabad, and he wants to know about Eicher Motors. And he's holding it at 2000, and the time horizon is 1 to 2 years.
definitely going to benefit from the GST cuts. And I think within the two-wheeler pack, the Royal Enfield product, which Eicher Motor makes, is definitely going to gain more and more traction. As far as the commercial vehicle segment is concerned, we are quite hopeful that once we get a sense on the GDP numbers this Friday, I think the economic growth would be visible. And I think, clearly October to December and January to March are typically pickup months for commercial vehicles. So definitely, I think if the investor has a long-term vision, he should stay invested here. He could definitely expect a decent risk one.
You could look at staying invested if you have a long-term view for Eicher Motors. That's the word coming in. But on that note, we'll slip into a very short break. More short-term queries as well as long-term queries to be answered on the other side.
Welcome back. You're watching Buy Now Sell Now from ET Now SBI Live Studio, and we are answering your stock-specific queries live. We are joined by Avinash Korakshkar and Hiben Kapadia, our experts for the day. And welcome back, both of you. And we are also joined by our viewer, Mr. Sunil from Mangalore. Hi, Sunil. Morning. How are you?
Morning, ma'am. I bought 450 ITC hotel shares last month at the rate of 224.75.
Sure.
What is the future target for the next 6 months?
Next 6 months, ITC hotels at 224. Is that right?
Yes.
All right. Heyman?
Yeah, ITC, okay, I don't have too much data to go on. It's been maybe 10, 12 months. But the way I see it, a short-term bottom is in place. If I were to look at it from a medium-term point of view, there is some time and price correction needed. The level to watch out is 204. As long as it doesn't close below 204 on the weekly chart, I think things should start getting better. And if this has to convert into green shoots on the medium term, we need a close about 227 on the weekly chart. Short-term bottom in place, a turnaround in the offing, but we'll have to be a bit more patient.
204 is the level, according to you, that should be watched at. But then, Avinash, what's going to be your take? 6 months horizon.
I think hotel companies should do quite well. See, October to March is the busy season for hotels, and I think looking at the growth in ARPUs as well as the supply crunch, ITC Hotels is the second largest chain in the country. So I think one has to keep the faith and stay invested for the next 6 to 8 months. My sense is that you would see a good bump up post the Q3 and the Q4 numbers. So I think we positively are. We are structurally positive on the, but I think for the slightly longer term horizon, Kavita, hotel companies typically are matured companies. So, giving a short term call would not be wise. But over the next 6 to 12 months, I think you could definitely expect a return of at least 14-15% from the current levels.
ITC hotels are fundamental as well as technical view. But moving on to the next query then. Now, this one is coming from Anil Kumar, who has written to us from Mangalore. He means this query is for you. Our viewer has bought 96 units of Chennai Petrochem at a price of 1,083 rupees. He wants to know what should be the target that he should be looking at for a 1 month period.
Firstly, the stock has moved up for 4 months in a row and is a bit overbought. A short-term top has been made. So if you're looking at a target in that time frame, 2 things need to happen. We need to sustain above 880. That is the case. One can expect around 1100 as a target in his right time frame.
All right, so that's the call coming in on Chennai Petro. But then let's move on and let's take a question on JSW Cement and also IDFC First Bank. This is Mr. Dindigul from Tamil Nadu. And Avinash, he wants to know the outlook. I think it's a long-term buy for JSW Cement, holding 500 shares at 147 and IDFC First 1,500 quantity. At around 82, he says. Should he be accumulating more as far as JSW Cement is concerned? And what should be done for IDFC First Bank?
No, I think as far as JSW Cement is concerned, if he has got a 2-year view, he can definitely accumulate. This is not a profitable company as of now. But I think looking at the kind of geographical presence, the kind of infrastructure they have put up, and I think the group, strength, I would not be surprised that this could be a good turnaround candidate, but I think you need to stay invested here for the next 12 to 18 months. For as far as IDFC First is concerned, I think we expect a very strong kind of performance from the bank in the second half. With the interest cuts rates announced and hopefully with another rate cut expected in the month of December, my sense is, IDFC First is largely in the MSME and the small business finance segment. Their net interest margins, their CASA ratios have been pretty solid. So I think keep the faith and stay invested here also for the next 12 to 15 months. We could expect a decent risk reward.
So a decent risk reward is what we're looking at as far as IDFC First Bank is concerned. But moving on to the next query then, and this one is coming from Satyaveni, who's written to us from Hyderabad. Mr. Kapadia, this one is from you. This Satyaveni has purchased TCS shares, 190 shares at a price of 3,990 rupees. And Tech Mahindra 800 shares at a price of 1,700 rupees. He wants to know at what price can he average more quantity. What is your view?
I think TCS is an average at current levels. It's fallen off from 45.90 to sub 2,900. Short-term bottom in place, medium-term bottom in place. I believe a longer-term turnaround is in the offing. As of now, it's a recovery, not a rally. So I wouldn't be too excited about it. Yeah, but upside is definitely around the corner. Current level is the level to purchase, possibly with a target of 36.50. Beyond that, we would have to take a review of the situation, maybe 6 months down the line. As far as TechM is concerned, TechM has been relatively stronger. The entire IT sector is on the mend and is bouncing back. So 1,700, I think he can buy this maybe current level is slightly lower with a potential target of 1,580, 1,600. I think the target can be overcome, but as of now, this is how the structure looks. The picture is improved for TCS and Tech Mahindra in the medium term. The long term could take some more time to play out.
All right, so stay put. 1,580 and 1,600 can be your immediate targets, but then yes, scenario has definitely improved. But then from IT, let's move to Pharma, and this is Avinash for you. This question talks about you wanting your overall view on the pharma sector with two specific stocks in concern. One is Strides Pharma and Aurobindo Pharma. Are they good bets as far as the pharma story is concerned right now from the time horizon of 1 to 2 years?
I think within the pharma pack, we continue to like companies like Aurobindo Pharma and Lupin. I think, Strides Pharma, I would suggest if the investor has a position, he can hold on. But I think in terms of incremental upside and in terms of the overall opportunity in the US markets, I think Aurobindo Pharma is a large player. Lupin has shown very strong numbers in Q2. The commentary has also been very good. They're also large players in the US market. And I think if one was to look at the next 12 to 18 months, Lupin and Aurobindo Pharma could be better, bets as of now. So I think if one needs to deploy money, one can deploy equally in both the stocks. I think stay invested for the next 12 to 18 months and one can expect a decent risk reward.
All right, so that's about the pharma space. But for now, we'll slip into a very short break. We'll be right back with more of your queries to be answered on the other side.
Back, you're watching Buy Now, Sell Now from ET Now SBI Live Studio, and we're answering your stock-specific queries live. Guests with us are Avinash Korakshkar and Himin Kapadia. But then let's quickly look at the markets where it's 26,132 on the Nifty, almost 1% up. On the Sensex, it's 768 points, 85,358, almost 1% up. As far as Sensex is concerned, with Bank Nifty, more than 600 points right now, 59,442. That's the number. On Nifty, JSW Steel almost up more than 3%. HDFC Life 2.5%, Trent, Adani Ports, Coal India, Interglobe Aviation showing gains of almost more than 1.5% to 2%, and on the losers we have Bharti Airtel almost down 1.5%. But then let's move on. We're also joined by a live viewer, and this is Mrs. Godrej from Mumbai. Hi ma'am, good morning. How are you doing?
Good morning. I'm fine, thank you. I have 3,000 Cybertech shares.
Okay.
And 800 TCS shares. So if I need money, which of these companies should I sell? That is my first question.
Sure.
Second question is, which company gives better dividends?
Sure. All right. Just want to understand so that we can go to the experts accordingly. This is a long-term buy, a long-term hold, or a short? It's a long-term
more
hold.
than 15 years.
Sure.
ago.
All right. Avinash, we'll just focus on your answer as far as TCS is concerned.
No, I think as far as dividends are concerned, Kavita, I think it's a no-brainer that TCS gives very good dividends. So I think the viewer can understand that TCS is a Tata Group company and gives very good dividends. It's been kind of a favorite IT stock, and despite the fact that the IT sector has faced a lot of headwinds, we still feel that looking at the kind of long-term prospects and the kind of hopeful possibility that the US-India trade deal can get signed very soon. Definitely, I think from the month of January or February onwards, a lot of US deals are going to be signed up. And TCS is a large company, so I would say that if the investor can hold on here for the next at least a couple of years, because already the investor is a long-term investor, a lot of value creation can happen. I think the company is cash rich. Company has made several buybacks in the past. And most importantly, it's got a healthy order book, which can give it a reasonable visibility in terms of top line and profits. So I think, if the investor can give in some more time and stay invested here, obviously she could get a decent risk reward.
So you could look at a decent risk reward as far as TCS is concerned if you hold it for a longer period of time. Hope, Ms. Godrej, your question was answered. Thank you so much for tuning in today. But let's move on to the next query then. This one is coming from Shrikant, who's written to us from Hyderabad. He holds Delta Corp 100 shares at a price of 126. He wants to know whether he should average, hold or exit at the current levels. Mr. Kaparial, you want to take this one, please?
Short term, medium term, long term. Delta Corp is in a downtrend on all time frames. So, except being oversold, that is not saving grace. Nothing else seems to be going for it currently. So, I would say it's a sell on bounce if not at current levels.
All right, let's move on and let's take other question now. This is HG Infra and JSW Infra. And right time to buy. This is Satya asking. And all right, Avinash, I'll come to you. He also wants to switch from HCC and buy these ones. Which one should he be going for?
No, I think, if he's got a 12 to 15 time frame, then HG Infra definitely could suit the bill. They have a healthy order book. And most importantly, I think, they've been showing a decent kind of performance. So my sense is that if the investor can stay invested for the next 12 to 15 months, infra is a segment which we believe a lot of money government is spending. Private sector capex is also happening. And plus they have a very decent order book, which gives them a good, decent revenue visibility over the next, say, 12 to 18 months. So HG Infra can definitely be a much better bet in the current scenario.
So that's about the infra space. But moving on to the next query, this one is coming from Harpreet, who's written to us from Mumbai. Their query is about Havells. They've been holding about 75 shares at a price of 1450. How much upside potential does this stock have, and what should be the ideal holding period that they should look at for a decent set of returns is the question. Avinash, would you like to take this?
No, I think, Havells is a very well-known, player in the consumer durable space. Most importantly, it's a debt-free business. My sense is that with the interest cuts rates announced, with the rural demand, picking up, and of course with GST cuts announced, I think you could see a good bounce back in the performance of this company, for the third and the fourth quarter. A lot of demand potential exists in India for the kind of products Havells makes, and I think they have got a very large, good, effective distribution network. So my sense is, I think it needs a little bit of more time to, give a reasonable risk reward, maybe the next 12 to 18 months, but it's a quality stock favored by institution fund managers. So I think definitely continue to hold. You could get good returns over the next, say, 12 to 15 months.
Continue to hold. Havells India is a thumbs up from Avinash. But the next question coming in, then this question I'll be asking both of our experts because the strategy to deploy almost 5 lakhs in the markets, and ITD Cementation is the stock in concern. This is Yuvraj from Chennai wants your view. So Hemant, is the price right to buy, or any other stock that you might want to recommend in this particular sector?
I think it hasn't done much for quite some time now. There aren't any particular positive signs as of now for something like this. So I'm not sure in the same sector, but I would like to buy something like a Reliance or a PFC and even a Larsen from a longer term point of view. I think they look much better. And at the next year or two on technical parameters, they look quite positively interesting.
Reliance and PFC, your take. Avinash, do you want to guide Yuvraj how to deploy 5 lakhs? It looks like an investment horizon that he wants, and ITD cementation is something that he is keen on.
Well, I think if he's got the next 2 years in mind, Kavita, he can definitely look at ITD cementation. They've got a very healthy order book and it's a MNC play. Most importantly, it's in the construction EPC business, and their specialization is into tunneling. So I think they would definitely continue to grow. But I think rather than putting all money in one stock, I think he should try to broad base his portfolio. Maybe he could look at one or two private sector banks, like a Federal Bank looks pretty attractive. And from the auto space, I think he could also look at accumulating a little bit of M&M, because we feel that over the next 6 to 12 months, both banking as well as autos are going to be sectors where a lot of outperformance could happen.
All right, then let's move on and take the next query. Then this is coming from Chirag Thakkar, who's written to us from Hyderabad. They want to know the short-term target that they should be looking at for Manapuram Finance. Mr. Kapadia, what is your view? How long? Where do you think the prices are going to settle for Manapuram Finance over a period of about 6 months?
We're currently at 283. I believe a close about 290 should take it to 310. So that I think would be a possible target for Manapuram Finance in the next 6 months or so.
Sure. All right. So next question is from Venkatesh, Hyderabad, and holding 1,000 shares at 4120 for TCS and IndusInd Bank. Also, he wants to know the outlook. I think it's a short-term buy. Himen, your advice on this?
Yes, yes, correct. I think I am positive on TCS. About 3170. We are heading towards 3250, 3400. So I think it quantifies as a short and probably a medium term buy. As far as Indus Bank is concerned, I believe it has turned the corner. About 860, we should be going to 920 and 1000. So I believe there's a upside built in IndusInd Bank in this 6-month time frame. Yes, both look good.
So both IndusInd Bank and TCS look good. Then let's move on to the next query. This one is on Route Mobile and PB Fintech. They want to know the future prospects of these two companies, whether they can continue to hold for a longer term. This is Lakshmi writing from Hyderabad. Avinash, what would your view be, Route Mobile and PB Fintech?
Well, I think both these companies are basically value-added technology players. If you talk about PB Fintech, which is Policy Bazaar, India insurance is sold physically via agents. I think this company should definitely do well over the longer term. There are many marquee investors who have invested here, but I think you need to keep a runway of at least the next 2 years, because that is when this business will become extremely scalable and profitable. As far as Route Mobile is concerned, this is another company which is related to the telecom sector. I think Q2 numbers have not been good, but I think if you look at the bigger picture, I think they definitely have a very big runway for growth. So, in both these companies, I think if one takes the next 2 years plus in mind, then only I think the risk reward could be positive. In the short term, we don't expect any major triggers.
Right, no major triggers as far as short term is concerned. So that's a take on Route Mobile. But then, Avinash, there's one more long-term query on HUL. This is Mr. Narsimulu from Nellore, and he's bought 400 shares of HUL at 2623 and wants to hold for 3 years.
So I think he can continue to hold. I think now recently Hindustan Lever has divested its ice cream business. So, the shareholder can make a decent amount of money from this value unlocking opportunity also. See, Hindustan Lever, if he holds on for 3 years, I think it's a compounder stock, Kavita, where valuations are not cheap. They are fair to expensive. So, if he holds on for next 3 years also, I think average, I think he could expect a return of say 12-13%. This cannot be a stock where alpha can be created, but yes, capital can be protected and he can expect steady returns. So I think he can stay invested if he's got a targeted return of 12-13% every year.
You could look at staying invested in HUL if you're looking at a target of return of 12 to 13% every year. That's the view coming in. But on that note, we'll slip a very short break. More queries to be answered on the other side.
Welcome back. You're watching Buy Now, Sell Now from 18 Hour SBR Live Studio, and it's time to again get connected with our viewers. And Avinash, I'll come to you first. This is a long-term question from a senior citizen. His name is Mr. Sundaram from Coimbatore, and he wants to give 1 year to PFC. He's bought 500 shares at 380, and he wants to know the target or maybe the kind of fundamentals working behind the counter, and should he be there for a year's time in PFC?
And see the kind of growth we are seeing in the power sector. There are lots of opportunities for the power financing kind of segment. PFC is a very well-established player, and I think if we can hold on for the next 12 to 15 months, hopefully as the power sector grows, the disbursements in the finance in the power sector grow, there is definitely good scope for this company to grow. As far as target price is concerned, the stock has come down, from its earlier peak levels. So I would say that if he is continuing to hold on, I think give a target of at least 14-15% over the next, say, 12 to 15 months. This is a slow mover stock, so one has to be a little patient, and one has to stay invested for a longer period of time to earn a decent kind of reward here.
All right, so you need to be patient when it comes to PFC for a decent risk reward. But moving on to the next question then, this one is coming from DRK Srinivas, who's written to us from Hyderabad. Mr. Kapadia, let me come to you for this. 125 shares of LIC, they've been holding since the IPO. I want to know whether they should exit at the current levels and look at investing in any other stock. What would your recommendation be?
Well, it's very tempting to suggest a shift to maybe a TCS or a Larsen, but LIC per se doesn't look bad. I believe it's turned the corner, and I think there's a negative overhang of possible OFS, but otherwise about 920 the stock should start looking better. So I say you waited for all this and wait a bit more. I think it is looking promising on technical parameters. A weekly close about 920 would be the first indication that this positive anticipation is fructifying into something more concrete.
All right, so that's on LIC, and let's take Mr. Sunil Kumar's question, and he's looking at a long-term recommendation on Yatharth Hospital. 813 is the price which he's bought 30 shares. That's a quantity. Avinash.
Yeah. So I think hospital businesses are doing pretty well. In fact, Kavita, and I think Yatharth Hospital has been one of the large players within North India. I think they recently implemented a new expansion at their facility. So my sense is that if the investor can hold it for a slightly longer period, because valuations have now become fair to expensive. But I think he need not worry. I think our sense is that over the next, say, 12-15 months, a price of 900, 950 looks very much possible. A lot of institutional investors post their QIP have come in. And I think this is a growing business. So I think he needs to stay invested here for a longer period to get a better risk reward.
All right, so you could look at Yatharth Hospital for a longer period of time. Moving on to the next query then, this one is coming from Venkat Rao, who's written to us from Vishakhapatnam. He's a long-term investor though, but this query is for a relatively short term. His query is on Poonawala and HAL. He wants to invest for a period of about 6 months. Mr. Kapadia, what do you think should be the correct entry levels? That's his question.
Firstly, if I can interject a bit, I'm not sure if HAL and Poonawala both quantify for an investment from a 6-month point of view. HAL, especially, I believe you need to extend the time frame to maybe 15 months, 2 years. Many of these stocks, defense stocks, they've gone up 10, 20 times. Do not expect them to move or gain momentum or pace or post fresh all-time highs for at least a couple of years. Give them time to recoup. A time price retracement, the correction of a greater degree was happening in HAL. So longer term time frame, yes. If you have 6-month time frame, no. As far as Poonawala is concerned, I believe that we've had a decent run up from 270 to 570. Stock is topish, top heavy, little bit of negative divergence. So once I'm not sure if this quantifies from a 6-month point of view. But if you do like the stock fundamentally, keep a stop loss of 435 and a target of 520.
All right. So, specifically talking about HL, you need to increase your time frame and around 435 stop loss, Poonawala, Fincorp, if at all you are still interested. Let's move on. And again, a long-term hold on Bajaj Finance. This is Mr. Mehra asking for a recommendation. Vinash, his buy price is 917 Bajaj Finance. Long-term view.
So I think, see, this is also a compounder stock, Kavita. I think within the NBFC space, Bajaj Finance is a very prominent NBFC. And I think looking at the kind of balance sheet, looking at the kind of liquidity and asset quality, there's no doubt that, if the investor stays invested for the next 2 years, he could definitely expect a decent reward. In these kind of stocks, a 12-15% compounded growth is very much possible because these are portfolio stocks. Rather than looking at these companies on a quarter-to-quarter basis, it's always better to look at it from a slightly longer term horizon. So yes, structurally we are positive here, but I think the risk reward should be not very aggressive. I think 14-15% returns should ideally be targeted for a company like Bajaj Finance.
It's about Bajaj Finance. But before we wrap this edition of Buy Now, Sell Now, a quick query on Cochin Shipyard. This is from Sally Devi from Kerala. She already has 50 shares of Cochin Shipyard at a price of 1950. She wants to know whether she can add more at the current levels. Mr. Kaparia, what is your view?
Buy closer to 1600, but it's not a short-term call.
All right, so that's a take on Cochin Shipyard, and with that, it's a wrap on Buy Now, Sell Now also. Thank you so much, both of you, for being on the show and helping our viewers with their stock-specific queries today. And for our viewers, stay tuned to ET Now because more updates coming up in markets at noon after this break.